Welcome to the short-term show from Blue Ridge, Georgia. We will cover everything you need to know, including buying, holding, managing from a distance, raising rents, renovating, and how to rent it when you are not using your very own vacation home in the North Georgia mountains. For more information on current purchase prices and income data, please visit theshorttermshop.com. Welcome to the Short Term Show special episodes from Blue Ridge. Here we are in Blue Ridge with the Short Term Show, and today we are talking about financing. We've got Yak, who's of course a familiar face. He does sell houses in this market, and he's a rock star. And we got Max, who's got his own brokerage and does financing, does loans and mortgages, etc. So, Max, welcome aboard. Good to have you.
Hey, thank you so much for having me. I appreciate it.
Absolutely. So, I do want to start out by talking to something that's outside, slightly outside of your wheelhouse, and you might know about it anyway. But all three of us will just kind of banter on the topic of creative financing. We'll get that out of the way. To me, this is not really something I'm all that interested in, quite frankly. I like to go get a loan the old-fashioned way, but it is pretty popular, or at least on TikTok anyway. So I guess let's cover that. Are you guys seeing anybody do? Well, right now, sub 2 is the big popular one. Are you seeing anybody do subject to? Are you seeing anybody get successfully doing seller financing? Any kind of creative stuff going on in your market at all?
I can say honestly, no, because a lot of times on these creative financing deals, the purchaser is kind of basing their numbers off an interest rate that's probably in the 6s, and when the seller actually has it in the 8s, let's just say they bought a year ago, and an investment loan or something like that, and they're in the low 8s. A lot of times for them, the numbers just don't work out. I've shot a few deals across the bow to some of my clients, but I haven't seen it work out. And to be honest with you, I haven't seen it, just hasn't made sense. In a lot of these cases, if somebody is, especially for somebody that just recently purchased the property and their mortgage rate is, high 7s, low 8s, it just doesn't work for the purchaser.
Max, logistically, how does that work? Let's say I've got a mortgage, a 30-year note that I got 4 years ago at 3%. Can somebody assume that loan?
Yes and no. So it depends on the kind of mortgage. It depends on the type of mortgage. So typically the only mortgages that are assumable are going to be FHA and VA, which are not going to be kind of what we're talking about here today, because those are strictly for primary residence. You cannot do a second home as an FHA loan, VA loan as a second home. That being said, some jumbo is assumable. It's not unheard of to have a jumbo loan that is assumable, meaning a loan over, it depends when they took the loan out, because that changes every year. Matter of fact, the new loan limits came out today. But, generally speaking, if you're talking about $1 million loan, some of those may be assumable.
Right. Have you seen anybody do subject to?
I haven't seen subject to. We hear about DSCR a lot, and I know DSCR gets done a lot. My comment to people is I call that kind of like the nuclear last option. Any client we talk to, we always try to see if we can skin the cat, get them in conventional, just being creative, anything we can do to get them in conventional. And then if we can't, then we're going to flip them to like a DSCR.
So you do offer DSCR, or your company does not?
We do.
Okay. But you would prefer to not go that direction.
You get way better rates, terms, everything going conventional. So I always try, just to be very candid, I've never actually closed a DSCR, because 99 times out of 100, if I get a client, we are typically able to find a way to get them into a conventional. I had matter of fact, a client of Yak's not too long ago. It was sometime in 2023. Another lender told them they had to go DSCR. We got them closed conventional. Rates were, I think, a point, 2 points lower, no prepayment penalties. So much, much better financing.
Okay. So just again, let me throw this out there, not a professional of any kind here in the finance world, but for some folks, DSCR is a wonderful product.
Correct.
And if you have a 1099 situation or a day job W-2 situation, that kind of thing. But Max, it's not necessarily in your wheelhouse. You can offer it, but don't really do that on a daily basis.
Correct. So where I feel like to your point, DSCR is a great loan for a group of people like professional investors. If they've got 10, 12, 14 second homes, investment properties, absolutely, 100%. when I get the call, 99 times out of 100, it's somebody buying their first home, second home. And so we try to see, if we can get it done kind of conventional. Yep.
Yeah. Now, and I think, was there a period of time, again, you're not closing really any DSCR, but when the rate started going nuts, was there a small period of time where the DSCR had a better rate than the conventional?
Never that I saw, but to your point, I wasn't checking it daily. I've only seen DSCR. Yak would probably be able to answer that better than I would, because I know he's got clients that have closed DSCR, and so that he may have a better answer to that.
Closed very few, to be honest with you, probably 2 or 3 in the past 2 or 3 years. 9 times out of 10, like I said, once people see the rates and all the fees and everything associated with them, we're flipping them over to conventional. Now, also think that's a byproduct. The amount of DSCR loans we're using here in Blue Ridge is a byproduct of who these buyers are. A lot of these mega investors that have, 10, 20 houses in their portfolio, they're buying in 30A and they're buying in the Smokies. I think a lot of the clients, our short-term shop, brethren that are coming, from other markets, they may only have 1 or 2 properties, and it's, conventional tends to be the best product for them.
I know I'm going to step in and say, I know DSCR is important and valid. So I've actually signed up with the largest DSCR lender in the country, and they go right off appraisal rent schedules, and they use Air DNA data versus long-term rental data, which is the problem you run into with a Fannie Mae appraisal, so to speak. So, we just have it available because I know it's going to be needed at some point.
Yeah. Okay. Well, Max, go ahead and give me your just, kind of general overview of your bread and butter, which I would assume is going to be a 30-year fixed conventional mortgage. What is that, and why do I want it?
So most of what we do is going to be, to your point, 30-year fixed, Fannie Mae, Freddie Mac, VA, FHA, second homes, investment properties, primary residences. Anything over 5 units is going to be considered commercial. So that's not where we are either. I love a 30-year fixed. It's tried and true. You don't have to worry about it. Every now and then somebody wants to talk 15, 20-year fixed. The ARMs, adjustable rate mortgages, don't really price great right now. And they haven't for a while. So I can't even remember the last time we sold an ARM. So I would say most of America right now is fitting into that bucket.
Right. I call them the golden ticket, right? Each individual gets 10 conventional loans. And of course there is a little bit of red tape getting over 8 of them. But, to me, it's like, first of all, you can't get a 30-year fix anywhere else. It's one of the best things about America. You go to Australia and tell them you want a 30-year fixed mortgage, and they're going to be like, "Are you crazy? What is that? That doesn't exist."
I got a great story to that point. I flew up to Montreal, did a 48-hour boomerang to see my grandmother because she wasn't doing well. And I was on a train trying to get to Ottawa, and the train was relatively empty. And we were both laptops, phones. And the guy literally on the other side of the train to me was talking about debt to income and underwriting. And I was like, "Are you a lender?" He's like, "I'm a broker here in Canada." I'm like, "Oh, interesting." So we started chatting. Their loans are 2 to 5 years tops. That is it. You have to reset your mortgage every 2 to 5 years.
Yeah.
It's crazy. It's wild.
Yeah. And again, that's, we'll talk about commercial loans here in the States, because that's sounds like kind of like a commercial loan here. But, in the US, man, one of the greatest things about this country is we've got a 30-year fixed mortgage, and you can get cash flow off of that. If you can't cash flow with a 30-year fixed, don't do it. So it's just, take advantage of them. They're amazing. Right now, obviously rates are not as amazing as they used to be. And Max, talk to me about that. Where are we going with these rates? And again, at the recording of this, which is right between 23 and 24.
Yeah. So that's funny. Yes. I was actually making some sales calls prior to this, letting agents know, hey, might be time to start reaching out to people on the sidelines, because rates have trended back down the last couple of weeks. If you remember, about a month and a half ago, we were at brokers, like people that are priced cheap, were at 8%. Banks are at 8.25%, 8.5%. We're in the high 6s, and it's coming down. And we're talking primary residence.
Again, this is so timely. Like, somebody listening to this in 6 months, possibly none of this part of the conversation is going to make any sense. But you're saying that right now you can get me a conventional loan in the high sixes.
And if you want to pay a point, I can get you one in the mid to low sixes. And I sent Yak actually some pricing yesterday from one of the second homes and investor properties. They're the pack leader. And if you got a sizable down payment, which a lot of these folks do that are buying right now on investment second homes, we can do high sixes on those as well.
Is that going to make purchase prices start creeping back up again?
Well, and that was kind of the point of my sales calls this morning. What I was telling agents was, hey, if you've got a listing that pulled because they couldn't find a house they wanted to buy, or you have somebody that's talking about potentially listing, I think it's a great time to reach out to them, beat the spring market, in Georgia here, March, April, things really, really get crazy and competitive. Maybe get ahead of that curve and say, hey, you might want to start thinking about listing early, especially if you're trying to buy, because rates are coming back to what I'm going to call a very, very reasonable spot. If you Google the 30-year fix, I tell everybody this, over 50, 60 years, there's two outliers, the free money at 2.5% and the Jimmy Carter money at 18%. Outside of that, rates always trended between 6 and 11%, with clients paying 1 to 2 points to get those. So if you can get a 30-year fix that's 6.5 with no points, 6.99 with no points, take it. Don't be greedy. Go get that money.
I'm happy with 6.99. People were getting greedy with these 2 and 3%. It was fake, I mean, and then I look back at my spreadsheets, and I've got loans from prior to that craziness that are 6s and 7s, and I never bothered to refinance them. I didn't even want to waste my time. They were 30-year fixed, and it's a lot of red tape to go back through that again. So I kept my 6% interest rate. So. It's an interesting conversation that, again, is not even close to evergreen and I think that's the biggest problem right now, is that these rates have changed so dramatically in such short periods of time. And that's just kind of where we're at right now. But anyway, let me talk to you about, you're a brokerage. Yes.
Yes, correct. Yep.
All right. Can you explain to me, like I'm 4 years old, what a brokerage is?
That's a great question. So we are not beholden to a bank. Like my best friend, he works at Ameris. He has to sell Ameris products. Ameris could be price grade at 10 in the morning. They could be priced completely out of the market by 2 p.m. So we work with a bunch of different banks. Banks you've heard of: Rocket Mortgage, United Wholesale, Ameris, and banks you haven't maybe heard of, smaller banks like Kind Lending, for example. And actually, they're getting pretty big too. But we act as an intermediary between the customer and the bank to try to find them the best rates and terms based on the time, because rates change sometimes 3-4 times a day. And to my point, just because a bank is price graded at 10 a.m., they may be out of the market by 2 or 3 p.m. So our job is to go find the right bank at the right time to get them the best possible deal. And the biggest question I get, I like to use Rocket as an example. Hey, Max, if you're brokering the mortgage to Rocket, why wouldn't I just go to Rocket anyway, cut out the middleman? Actually, you know what? I'll use Ameris since my buddy works there. If you're brokering it to Ameris anyway, why wouldn't I just go to Ameris? Cut out the middleman fee. There is no middleman fee. It's counterintuitive, but as brokers, we actually get lower interest rates than they give their own employees. They're not paying for my health insurance. They're not paying for my marketing. They're not paying for my office space. They're not paying for my assistant. So when I send them a loan, it's profit. It's profit. I mean, it's just money in the bank for them. So my buddy at Ameris, I call him every now and then, and we are typically 1/8 to 1/4% lower on our Ameris rate sheet than he is on his Ameris rate sheet.
Now, the consumer, is it costing me extra to use a broker than to go direct?
No, that's the point. We're actually cheaper because the banks give us, there is no middleman fee. I'm not charging a fee on top of what Ameris is charging. Ameris actually gives me better rates than they give their own employees, because again, they're not paying for anything. They don't pay. The only time they pay me is if I sell a product. My buddy who works at Ameris, they're paying his health insurance. They're paying for his office space. They're paying for his computers. For me, I'm a man on an island. If I sell something, it's pure profit for them. So I actually get better rates. Same thing with Rocket. Rocket gives me better rates than they give their own in-house employees.
Are you actually doing loans with Rocket? Does that happen or not really?
No, I prefer United Wholesale. We used to broker to Rocket. If I did broker to Rocket, it was typically refinances versus purchases when I was comfortable with that. But I like to use them as an example just because everybody knows Rocket. They do a lot of TV advertising.
Right. Yeah. It's a household name. Right. Yeah. But from what I understand, they're kind of a pain to work with because it's a large, call center type of an environment. But
correct. So refinance, more comfortable. When I was brokering to them, I would send them a refinance every now and then. The purchase business was a little tougher just because we want a guaranteed outcome. If I tell you they're closing on December 20th, they've got to close on December 20th. I can't call an 800 number and wait on hold to figure out if they're going to close or not.
Right. Well, you mentioned refinance. You think that those are going to start coming back in style when these rates go down, or?
I do. So I actually had a Zoom call earlier today with the team, and the conversation I had was just about that. Rates are trending down right now, which I don't think most people expected. Most people. So the guy on the train from Montreal, he was actually in Montreal for a big banking meeting. A bunch of CEOs of big banks were there. Matter of fact, one of the CEOs of the bank was in front of us. And they were all saying, hey, third quarter, fourth quarter, we expect Fed rate cuts. Now, Fed rate cuts don't equal mortgage rate cuts, but they're expecting them third quarter, fourth quarter next year. And they think rates might drop back down into the fives. That's what they're guessing, right? We're all guessing. We're starting to see the drops now. So this morning, for example, I read an article. I don't remember what site it was, but they were talking about, hey, we might start seeing cuts to mortgage rates here, in January, February, first quarter. It might not be third or fourth quarter. So it's hard. We're all guessing. It's hard to say, but right now they're certainly trending in the right direction. Yeah,
I'm surprised. I'm one of these guys. I thought, and again, we're way off topic here, Yak. So feel free to tell us to get going where we're supposed to go. But I'm one of these guys. I thought it was here to stay. I really did. There was such a crazy burst of it was insane for about 24 months.
Yep.
And I really think that what's going on right now is probably as healthy as it. In other words, it could be, even though real estate sales are in the gutter and compared to last year, they're really kind of a little bit more normal right now. And I think that what's going on, again, I don't want to. We're starting to get into the news and politics, but to me, it could be a whole lot worse.
Agreed.
Yeah. Luke, one thing I did want to touch on here to kind of take it in a different direction is kind of what the uniqueness of buying in Georgia. And because there's a lot of times I speak with lenders from out of state and ask them simple things like, hey, so let's just say I have a buyer come to me and I'll tell them, hey, talk to your lender, ask them how many days of financing and appraisal contingency you need. And a lot of times these out of state lenders, they don't understand that. They don't know what that means. And they'll say, well, we need about this. I don't need about, because in Georgia, you have to put a hard fixed number on a contract. And a lot of times when you have 5, 10, 20, 25, even $50,000 worth of earnest money on the table, you have to be very precise. And if you're not working with a lender, who is intimately familiar with Georgia contracts and how they work, you can get yourself in hot water. And I understand that, the credit union down the road from you in Paducah, Kentucky, can give you a loan, an eighth of a point better than whoever here locally. But if they can't get it done for you in a timely manner and they miss a date on that contract by 24 hours, you could cost yourself tens of thousands of dollars, not to mention the time and effort, and you're still not owning anything. So for me, I tell everybody, and that's why I wanted Max to be into this conversation, is these Georgia contracts are different than a lot of states. They're similar to North Carolina. They're not very close to Tennessee and Florida. And we have to work with a precision. And also, I feel like in Tennessee and Florida, a lot of times the sellers and everybody involved are kind of a little loosey-goosey, meaning, hey, yeah, we're going to close on October 5th, and everybody, man, we didn't make it. Let's just close on the 7th. I can tell you here in Georgia, there's a lot of sellers that will cut your head off if you miss that day by 24 hours or by 24 minutes. Okay. So working with somebody local, in my opinion, is absolutely critical. Max 9 times out of 10 is going to give you a rate that's going to be competitive to anybody. And I'll say that with just about anybody local. I'm not trying to pimp Max here by any stretch, but the reality is working local. If I'm buying something in Sevierville, I want to work with somebody, that knows exactly what's going on, that understands those contracts, that has chewed through hundreds of those contracts, if not thousands of them, like Max has. And we just have some nuances to the way our financing contingencies are designed that, working with somebody who has done it a lot in this state has a tons of value.
Max, can you speak to that? Tell me what are some Georgia specific things?
Yeah, absolutely. So that's a great point, Yak. And it's even with the market change this calendar year, it's still that. I would say 99% of our closings this year were in 21 days or less. And I mean, just last month we had I think 1 or 2 8-day closings, which takes a little time off my lifespan, but we can get it done if need be. A little stressful, but we'll get it there. In Georgia, you've got the due diligence, the finance, and the appraisal. The due diligence is your get out of jail free. You can terminate the contract for any reason or no reason at all. And those are typically 0 to 3 or 4 days here. Most finance and appraisal contingencies are somewhere between 0 and 7 days, which means you've got to get the appraisal in and you've got to get the loan approved by underwriting within that time frame. And then again, most of our closings are 16 to 21 days. So it's fast here in Georgia. Now that, if it becomes more buyer centric, as it's slowly leaning, those timeframes will loosen up a little bit, but it's still going to be quick, especially, to your point, compared to places like Florida and Tennessee.
Wait a minute. 16-day closing. Can you explain that further? In other words, once the due diligence is done, you only have 16 more days on?
No, 16 from binding contract.
Binding contract. Yeah. I had 2 last month that were 8-day closings. So we got a contract on like a Monday and we closed it the following Tuesday.
Why?
That's
normal?
No, 8 days is not normal. 16 to 21 is. 21 is very, very normal.
Was it normal when we were in the peak of things and couldn't find an appraiser?
100%. Yeah. I mean, I was doing, 100%. Yeah, because it was super competitive. It was worse. You had 10 people buying the same house. So everybody's the sellers are like, who's giving me the highest sales price and who's going to guarantee the appraisal and financing the fastest. That's what we're looking at. So it was worse. When it was busy, it was absolutely worse. We would order appraisals we would order an appraisal on a Thursday and need it back by Monday.
I'm confused. Why is that? Every other state I've ever dealt with is a 30-day, just kind of a general, rule of thumb.
Yock may be able to answer that better than me. I think it's just lack of, Georgia's a growing state.
Lack of patience,
lack of inventory. And
our sellers are very shrewd. Our sellers are very shrewd. All the agents here are sharks. And, I can't tell you how many times I probably lost, probably 10 to $20 million worth of business in the past 3 years, simply because the buyers were using somebody out of state and they need 21 days financing and appraisal contingency. And they're going around the corner to a Max or somebody like that. And he's giving them 7 days. And for the sellers, they're saying to themselves, hey, this guy, I know he's going to be good for a loan in 21 days. He's got 21-day grace period. These other people have 7 days. They're going to go, if the numbers are similar, they're going to go with the sure thing. They want to know who's going to have their loan ready and clear to close in 7 days as opposed to 21. And that is such a huge deal, and kind of a unique thing in Georgia is speed matters. And you've got to connect yourself with somebody who understands that and is able to get you through those contingencies, and will hound you for the information. That's one thing I like about Max's team. He's got a couple pit bulls that works for him, and they will call you at 2:00 in the morning and leave you nasty messages saying, hey, dude, you want to close this thing? I need your XYZ documents. A lot of these lenders just sit on their hands and say, Yock, Carl hasn't uploaded his docs to the portal. And I'm like, well, have you reached out to him? Well, they have the link. That doesn't work, man. That's not how Max works. Max sits the dogs out on them, and he's getting their paperwork because he can only work as quickly as the clients give him the information.
You're getting me fired up. I'm ready. Let's close the deal. I love it.
The messages aren't that nasty.
Yeah. Hey, Max, let's say I'm new and I'm scared and I want to shop around. Can I pull credit with you and pull credit with somebody else and only one credit hit? And how does that work?
Yeah, so that's a great question. So generally speaking, so first and foremost, I've actually met with reps for the credit bureaus. They will not tell anybody exactly how credit works. They will not. It's secret, double secret probation. And the reason for that is they don't want us trying to rig the system. But generally speaking, the rule is within 30 to 60 days, you can have multiple hard pulls. And if you want to talk hard versus soft pulls, we can talk about that because that's an important topic too, if we've got time for it. But you have time within 30 to 60 days to get multiple hard pulls and shop around, and it should not affect your credit scores. Generally speaking, pulling credit does not really affect your credit. What affects your credit is late payments, collections, yada, yada, yada.
I'm going to ask you a personal question. If you find out that a client has pulled credit with somebody else, do you get annoyed?
No, not at all. I tell everybody, if you shop 10 reputable local lenders, we're always going to price in the top one or two. I get that you want to shop. It's the reality of it is it's difficult to shop, especially on a purchase. To Riak's point, you have 18 to 21 days to close. If you call me today and say, I haven't even found a house, I'm just looking, I can send you numbers, but they're irrelevant. The numbers could be different in an hour. So the problem is, I had a young lady that was shopping me. I think she was shopping me against a credit union. And I'll never forget this. It was earlier this year. And it was like a Wednesday afternoon. She sent me and this other lender thing. And one of our things is we're really responsive. We try to even if it's the weekend, get back to people really, really quickly. And so she said, hey, I'm under contract. Here it is. I need numbers. So I sent her numbers in like 5 minutes. Rates got worse. And I said, hey, did you get the quote from the, no, haven't even heard back from them. Next morning rolls around. So it's been 3-4 business hours tops. That other lender still has not sent her deal numbers. It's the next day. It was a $300,000 loan. By the time that lender responded to her and their rates were worse, we had lost almost $3,000 in fees. So her fees went up $3,000 in like 4 business hours by sitting on the sideline waiting for this other lender. So I tell everybody, when we get a contract, if you pre-approve with us, we lock you in. There's no cost, no obligation, because if rates go up, I want you protected. I'm a broker. If rates go down tomorrow, I'll just move you to another bank and start over. No harm, no foul.
I think I would be a little annoyed with that, but I get it. What was I going to say? Let me talk about briefly with conventional commercial loans. Now, you do not have to get a 30-year fix. All right. You don't have to get a 30-year fix. You can go to a local bank and get what some people call it a portfolio loan, a commercial loan. Usually that's going to be a 5-year loan, amortized over 20 years, but there are tons of variables there. Sometimes you can get 25 years. Sometimes you don't want 25, maybe go 15. And that is just a local bank. It's more of a handshake situation. It's usually for folks that have been in the business a little longer. Although I have seen folks that start out with conventional or commercial loans with the local bank. So keep in mind that that's not what we're talking about today. That does exist. We don't really hear it all that often here at the short-term shop. I use them. I use commercial loans. Well, quite frankly, I ran out of conventional loans a really long time ago, but it's a good problem to have. And then eventually, maybe you stop trying to use loans altogether. But anyway, what did we miss here, guys? We got a couple of minutes. What did we miss? This again, specific to the state of Georgia and the North Georgia mountains.
I would just add, work with somebody local. It does matter. Again, having somebody familiar with Georgia contracts, which are different than, other states. I totally understand and can respect if you are from Nevada and your neighbor is a lender and you think he's going to give you the best deal. I would say his deal that he's going to give you is probably not much better than anybody local. And he's going to have the problem of being able to find a local appraiser that's trusted, that knows how to price these properties. That's another deal. So, there's just so much differences from state to state that I highly recommend, if no offense, Max, but if I'm buying a cabin a beach house on 30A, I'm not going to use you, man. You're not going to be my guy. I'm going to use somebody that's familiar with that, that does that all day, every day. And specifically with Georgia, use somebody local, use somebody who's kind of lives it and breathes it every day, because our contracts are a little bit different. The speed and velocity at which we move, I would say is totally different than every state in the Southeast. So again, have somebody familiar with that. You will, let me add this, you will lose deals because you can't close quickly enough, because your financing contingencies are too long, because your appraisal contingencies is too long. You will lose deals, period, the end.
All right, let's back up. Max, thank you, Yak. Max, let's say I'm brand new. I've never bought a house ever, or maybe I bought a house that I live in. Quite frankly, this conversation that we all just had scares the crap out of me. Can you walk me through, just on a very elementary level, what it looks like to buy my first investment property? What do you need from me?
Yeah.
Am I scared? That kind of thing.
No, absolutely. So we work with a lot of first-time buyers. We're happy to walk first-time through experienced buyers through the process. Honestly, I would tell everybody if I could, to Yak's point, if it was a Florida loan and I couldn't do it, didn't want to do it, and you called me and said, "Hey, what should I do?" I would tell you, get pre-approved right away. Get the hard credit pull right away. It gives you time to fix problems if there's problems versus calling us up at the 11th hour going, "I found a house I love. What do I do?" So get pre-approved right away. The pre-approval is good for 4+ months. It's a hard pull. If anybody offers a soft pull, run like hell. Do not do it. Okay. So that's step one. That is a 15-minute process. That's jumping online, ballpark data. It's super, super simple. And that allows us to get you a pre-approval. It's really not a hard process. Most people are shocked about how quick and easy it is. For us, if you apply at 9 a.m., by 10 a.m., you've probably got a pre-approval sitting on your desktop waiting for you with your agent copied on it. So that's really the first step. And then we run numbers. Let's run numbers for you. Make sure we're looking at the right sales price houses, whether it's an investment property, second home, primary. Let's run those numbers, run the down payments, make sure you're comfortable with the pricing. And then from there, it's go find a house. It's really not that challenging and not that scary. We try to take it in little chunks so that you kind of eat as you go and you're not getting crushed with data. Oh, lost you.
Sorry. Man. All right. You guys wore me out, man. That's a whole lot of awesome in a short period of time. I guess I'm going to let you guys go. Max, how do we get a hold of you?
Easiest way is you can go to www.maxkallos.com, MAXKALLOS.com, or you can call me on my cell, 404-277-5884.
All right. And of course, Yak is here for all of your Blue Ridge second home, vacation home, investment property needs through the world's greatest short-term shop. We're the best in the business. We would love to earn your business. The shorttermshop.com from Blue Ridge. It's the Short Term Show.